Thanks, Joe.
We are getting set for the latest look at the Fed's preferred measure of inflation. Later this week, we'll get core PCE prices. They're due out on Friday. Investors hoping that that data will help clarify the Fed's plans for interest rates and whether we'll see any cuts this year. It's going to give us a much better take on what's been happening with inflation. For more on this, we want to bring in former Boston Fed President Eric Rosengren. He's a visiting scholar with MIT's Golub Center. And Eric, let's talk about this because this is a huge issue. We have one strategist earlier today say that the PCE is going to be more important than earnings this week for determining the direction of the markets. We've seen yields run up pretty substantially. A lot of questions about inflation and whether it is going to be more persistent and stronger than people had anticipated. What do you think?
I think you get a different perspective depending on which inflation index you use. So the CPI, which measures kind of out-of-pocket expenditures by consumers, is much higher than the PCE index. So core PCE is currently at 2.8%. Core CPI is at 3.8%. The reason is because there are several differences between these two indices. But the most important aspect is they have CPI puts a lot of weight on shelter, and shelter's been coming down only very slowly. PCE puts much more weight on medical services, and medical services have been much closer to 2% in terms of how much the prices have been increasing. So we have a divergence between the two indices. I do expect that the general trend for PCE core is going to continue to be down. So if you look at year over year PCE, there's still a downward trend. If you look at CPI, it looks like it's flattening out at a fairly high rate. Some of that is the difference in weights. So to the extent that shelter is coming down much more slowly, that means it's going to look a lot flatter and taking longer to get down to a level consistent with 2% inflation, while PCE inflation is likely to continue to drift down. I expect it to go down another couple tenths over the course of this year.
The PCE is the Fed's preferred index. It strips out some of the things that are usually a little more volatile. But maybe that explains the difference that you get when you ask consumers where inflation is versus when you ask a lot of experts on this.
I think that's right, because consumers tend to focus on what they actually write checks for. And the biggest check that most consumers pay for is their cost for either rent or their mortgage. While medical costs are an important expenditure category, some of those are paid by employers or by the government, depending on what kind of insurance you have. As a result, consumers don't necessarily feel the full cost of medical services the way they do for shelter. And transportation is another area where car repair, car insurance have gone up quite rapidly. So the Fed does look at PCE, but it looks really at all inflation indicators, both core and total. And it is going to be a little bit concerned if CPI looks like it's leveling off, where PCE continues to drift down. It's going to make it a slightly more difficult and nuanced debate than it normally is. Normally, these two indices move together pretty well. Prior to the pandemic, there was really only 0.3% difference. The two core measures right now are a percentage point different.
Is it fair to think that maybe this time is a little different with housing and it being much more persistent of a problem just because interest rates change so drastically? You have a lot of people who are locked into 3% and lower mortgages who aren't going to move, and that could very well push housing prices up for some time.
Yeah, so there are two components to the important areas in the shelter component. One is for people that rent, and the other is for people that have a house, but they calculate an owner equivalent rent. Detached homes have continued to have relatively high prices, but we are seeing rental units for apartments coming down. So there is a bit of a mixed difference there, but there is more persistence in shelter. It tends to be a very smooth series, so it doesn't come down nearly as quickly as other components. Focus on the goods prices, for example. There are many goods categories that are basically flat right now.